I'm Matt Bishard with REIT.com here in San Francisco for REITWorld 2013, NAREIT's annual convention for all things REIT. Joining me today is Arthur Hurley, Vice President and Senior Portfolio Manager with Columbia Management. Thanks for joining us today.
Thanks for having me, Matt.
Now, what would you say has been the biggest surprise so far for you as you look at the REIT market in 2013?
Yeah, I'm not sure it's been a surprise for me, but I think many investors have been surprised at how well REITs have done in this kind of rising interest rate environment that we've experienced so far this year. I mean, REITs are up almost 5%, and that's at a time when the 10-year Treasury yield is up over 100 basis points. And I think many investors have been surprised by that. I mean, while that's certainly behind what some of the broader equity returns have been during that time period, on an absolute basis, I think that's been somewhat attractive. And I think what investors need to remember is that fundamentals remain strong in the space. Certainly occupancies are either at or near all-time highs across most property types. Landlords have been able to raise rents. Market rents are continuing to rise. And you have a space where the lessons during the financial crisis have not been lost. And what I mean by that is balance sheets are very strong right now. And dividends are as secure as really they've ever been.
And are there any sectors that you think investors may be underestimating their potential as they start to keep an eye on 2014?
Well, I think that fundamentals will continue to improve. I think that there will be very few surprises from that standpoint. I think one of the property types that people really should focus on in here is the apartment space. I think that it's a sector that has underperformed for almost 2 years on a relative basis. During that time period, fundamentals have continued to be very strong. Growth rates have been decelerating, and certainly the public markets don't like decelerating growth. But with that said, they're nowhere near turning negative at this point as far as the growth is concerned. And you have a group where the discount is one of the steepest as far as discount relative to the underlying value of their real estate. And typically when you see a discount like that and one that's chronic, you start to see some takeover activity. And I think the apartment space, again, if fundamentals don't change dramatically towards the negative and valuations stay kind of where they are in that space, I think you could see some activity increase.
And obviously, REITs deserve a place in investors' portfolios at all times, but are there any types of investors that this type of market we're seeing now are being drawn to REITs?
I think the investors that continue to be drawn to the space are the ones that are most disciplined, the ones that are attracted to the diversification benefits that REITs give investors. Certainly you have a unique return profile that remains in place. You have strong fundamentals that, again, I talked about earlier. Those aren't changing anytime soon. You have strong balance sheets. And you have a space that has remained very disciplined to its core focus in providing income, stable income to investors. And those investors that are attracted to that are the ones that I think are most interested in the space right now.
Thank you so much for your insights.
Thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.